Hello everyone, and welcome to this presentation on the right way to trade tops and bottoms. Welcome, my name is Primo. I am the president and founder of Specialist Trading. And for those of you unfamiliar with my website, we are an educational company, just as the presentation I'm going to be giving you today is strictly educational. I like to provide my students and members at Specialist Trading all of the tips and techniques and strategies that I've accumulated in my 38-year career. If you're not familiar with me, I have been trading for 38 years. As I just said, I started my career on the floor of the Pacific Stock Exchange. I was a specialist on the floor for a total of 9 years. I was on the floor for a total of 16, and 9 of those years I was a specialist. And a lot of people aren't really familiar with what a specialist is or what a specialist did because there aren't a lot of them around these days. They're only in New York now. But they used to be regional in a number of exchanges, and so there used to be a lot of specialists around. If you ever Google and look at the old pictures of the regional stock exchanges in Chicago, in the Midwest, as well as Pacific Stock Exchange, Los Angeles, San Francisco, there in Philadelphia and Boston. If you ever look at those pictures and see the people yelling and screaming with all the paper on the floor, the specialists were those gentlemen behind the large wooden booths that were making the hand signals. And if you wanted to purchase or sell a stock, you went up to the trader who specialized in them. So that's how you get the name specialist. I traded through the crash of 1987 when I was a specialist and the bull market that followed after that. And so I know what works in terms of consistency and I know what doesn't. I've seen and traded in just about every market environment imaginable. So there have been tons of different techniques and methods that I've tried and that I've taught. And so I only teach and apply all the techniques that I currently use myself, and these are the things I teach in my courses. Now, today I'm going to be teaching you a great entry technique. This is not a full-fledged strategy. It's not coming with all of the pieces of the puzzle, but it is a great technique that you can actually add onto your current strategy that you feel comfortable with, or if you're a little bit more advanced trader, you can actually build a strategy based off of this entry technique. But once I show it to you and reveal it to you, I'm sure you'll really be happy with it and want to start using it as soon as possible. So I'm going to teach you that today, but before we begin, we are required to show you our disclaimer. So I ask that you please take a moment to view it. I'm going to show you a lot of performance results using this particular entry technique that I'm going to be sharing with you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. Once again, we are required to show you this. So as you are taking a brief moment to view our disclaimer, I would also like to invite each and every one of you to follow us on Twitter. There is our handle right there. You may want to copy that down. It's at SPCLST, abbreviation for Specialist Trading, as you see. I post daily information there, although it's abbreviated and not as detailed as I'd like to with this limited space. We still post anything from daily financial wisdom to actual signals that our strategies have generated. In fact, last week we posted a buy signal in the E-minis, and the next day they were up a good 20 points in one day, or roughly $1,000 per contract. We also post forex signals that our strategies generate, as well as stock signals. So there's lots of great free information, if not limited. If you want to get more detailed information about what we do and watch some videos and more detailed lesson plans, well, my sister site, Pro Trader Strategies, has put together a Facebook page for us, protraderstrategies.com. You can simply go there and you will get a lot more information about what we do and a lot more detailed information, videos and articles and such. So lots of ways to find out about Specialist Trading and my sister site, Pro Trader Strategies. Okay, so why don't we begin? And once again, I just want to explain what our philosophy is at Specialist Trading. Even though we provide all of our students with strategies and signals that are generated from those strategies, we are more about teaching you this information because it's our belief and our philosophy that the reason why most traders fail is because they're relying on faulty sources and just basically giving their power away. You know, either you go to some site which tells you what to buy, what to sell, or you listen to some trading guru, or you listen to what they're saying on TV, and you're basically taking yourself out of the game. I've noticed in 38 years that this is probably the main reason why upwards of 80% of all traders fail. So what we do is we provide all of our students and members with sound fundamental education that has stood the test of time, that is rooted in consistency, and then we work with you to mold it to fit your personal needs And then that's it. You're free to go on your way. We don't require you to pay a monthly fee or anything. We just really are mainly educating you these things that have stood the test of time and techniques that I currently use. So as you see here, my goal is not to simply trade for you or not to force feed you signals. My goal is to teach you how to trade with a specialist edge. This is the same edge that was able to turn my trading around. I suffered my first 2 years of trading on the floor, and my mentors taught me the same things I teach my students. So you'll see how much attention I give to teaching and to really mentoring in this presentation today. Now, before we begin, I just request that if you have any questions, kindly wait till the very end of this class. This will be conducted like a classroom. I'm going to be teaching you today. So just like a classroom, wait till the end to ask questions. I know a lot of webinars where you go to, it's interactive, but that tends to slow down, and many times if you wait for the next slide, your question will be answered. So kindly wait till the very end of the class in about 20-25 minutes from now, and then we'll go over all questions you may have, okay? The only question I will answer at this time is the most popular one, and that is this being recorded? Yes, it is. So if you have to leave early or if you're having technical difficulties, you can simply request a link to this recording, and we will send it to you right away. Okay, so why don't we begin? And I'm going to, once again, teach you an entry technique. So please remember that this is not a full-fledged strategy. I know once we get to the question and answers, you'll be asking, well, where do I exit? Where do I place my stop? What about money management? Those are all important pieces of the puzzle in order to have a full-fledged strategy. What we're just doing is just sharing with you one important piece of the puzzle, probably the most important, which is your entry technique. All right, so we're going to be talking about the right way to trade tops and bottoms. And in order to do that properly, let's first show you how most people trade tops and bottoms. And I'm saying this from firsthand experience because this is the way I used to trade when I first started trading on the floor, okay? Now, in order to trade tops and bottoms, we're going to first start looking with stocks here, okay? But then we'll go into futures as well as currency pairs. In order to trade any type of methodology with tops and bottoms, or you're picking, reversal points, we need to have some type of tool, some type of indicator which tells us when the market is overbought or it's gone up too much, and oversold when it's gone down too far. Okay, now this is very simple. You can use any indicator you'd like, either something that you've devised yourself, something that you subscribe to through some trading guru, or just go to your indicator box and do what I did. All I did in this particular older chart of Caterpillar Tractor was plot a stochastic oscillator. Okay, this is a slow stochastic. I didn't edit anything. In fact, I don't even know the parameters of this. All I know is that the upper threshold here in blue is set at 80 and the lower is set at 20. And that's it. I just simply plotted it, forgot about it. And I don't want you to think that, I know your eyes are going to light up when you see how simple it is to use this technique I'm going to share with you, but I don't want you to think that it will only work and you can only apply it with a slow stochastic. Remember, you can use it with any tool that tells you the market is overbought or oversold. Doesn't matter what it is, okay? Now, the way conventional wisdom tells us to trade tops and bottoms is that when we use some type of indicator such as this, when we were in the so-called overbought area, when the indicators flash and cross over above the 80 threshold, well, that's to sell, and when we're below, this is when you want to buy. It's that simple. So if we use that technique with this particular older example in Caterpillar Tractor, and by the way, these are older examples for educational purposes because I'm explaining the technique to you. But once you understand it, we'll show you charts that as recent as this past week. All right, so we see here that we're in the so-called oversold area, and this is where you want to buy, right? Because markets are oversold, the indicators cross, and so you jump in and buy Cat Tractor, and guess what? It works like a charm, goes straight up, so you're making money. Now, conventional wisdom tells us to stay long until you get to the opposite side of the coin, and to the overbought area, the indicators cross, so that's your signal to sell. So you exit with a nice profit, and if you're a more advanced or daring student, well, then you actually go short. So you sell here. Let's say you did go short, and you simply wait for the tool now to go into the oversold territory, as it did here. The indicators cross, and you cover your short and go long again. At this rate, you think you're going to retire in just a matter of months because it's just too easy. Trading cannot be this easy. You've never seen anything. And so you think you've got the key to success here. So now you're long Cat Tractor. You've had a couple of good trades. You're excited. And this time, it doesn't go up. But that's okay because you've had some good trades. You have some money in your account, some extra money. So you decide to do what we call doubling up or averaging down, and you buy some more. After all, if it worked before, it's going to work again, and you don't need it to bounce that much in order to break even. So you buy some more, and it goes up a little, but then it's right back into the oversold area. So you do what we call tripling down, all right, or averaging down again, and guess what? It continues to go lower and lower. It never goes into the overbought area, and then ultimately you've given everything back that you made on the first two successful trades. Does this look familiar to anybody? I'm sure it does, because this is the way I used to trade, and I'd have a couple of good trades and then give everything back on the next trade or two. Now, we don't just see this in stocks. How about the E-mini S&P? Let's look at this 5-minute chart of the E-mini. Once again, it's an older chart, but we're just explaining to you this technique the way most people use conventional wisdom. The same stochastic, we haven't changed anything. We're just looking at a 5-minute chart here to show you that this will apply in any market in any time frame. All right, starting right off the bat, the indicators cross in the so-called overbought territory. So you want to sell, and as you sell right here, well, guess what? The E-mini goes down about 5 or 6 points. You've got a really nice trade in your hand here in a 5-minute chart. And once the indicators cross over into the oversold, you cover your short and you go long. And now, guess what? The E-mini is going higher. So you're doing really well today. And now we cross again, and so you sell. Now at this point, you're thinking, once again, this is too easy. I should have just been day trading this entire time. This probably works much better just day trading, so I won't trade stocks on a daily basis. I'll use this for intraday trading. So you go short, and well, it doesn't go down. In fact, it goes higher. So you sell some more, and some more, and some more, and once again, you've given everything back that you made on the first couple of trades. So it didn't work on an intraday chart. What if we try the Forex currency pairs? Same exact concept, same exact indicator, although it really wouldn't matter which indicator we're using. But here we are looking at the older chart of a Swiss franc, all right? Now we are in the so-called overbought territory, so we want to sell, okay? And we just want to simply wait for the Swiss franc to go into the so-called oversold territory. Well, we wait, we sell some more, we sell some more, and ultimately it never went down. So we didn't even have 1 or 2 good trades the way we did in the E-mini futures and in the stock market. We didn't even have one winning trade. In fact, every trade was a loser, and we're probably busted right now. We've blown out our account because the Swiss franc continued to go higher. I'm sure this looks familiar to some people, because it looks familiar to me, because when I first started trading, this is the way I used to trade. After all, conventional wisdom had taught me that this is the way you're supposed to trade tops and bottoms. When something is overbought, it's gone up far too high, too quickly, too soon, and it's meeting resistance. So you obviously have to sell in an overbought area. And conversely, if something is oversold, it's gone down far too low, it's hit some type of support, there's no reason it should be at this level, so you have to buy it before it bounces, okay? The only trouble is, just like the slot machines in Las Vegas, there's no consistency to this type of trading. Now, traditional or conventional wisdom tells us that it will work, but just like the slot machines, it doesn't. It only works a couple of times, and then the next time or two, you usually give everything back. Because if you're in front of the slot machines, every once in a while, you'll get a winner. The bells and whistles will go off, you'll hear the clinking of the coins, and it'll give you this false sense of security that you're actually making money. But if you stay there long enough, over time, you actually won't make anything. It's just a false sense of security to keep you in there, to keep you trading. It's the same way with trading tops and bottoms. Now, trust me, I know of a few traders who are able to trade tops and bottoms using this style or this concept, and they do quite well. But they are probably the 1 or 2% of all traders. The rest of us, the majority of us, the 98%, find no consistency in this type of trading. It's very difficult. Trust me, I know this from firsthand. I'm not just preaching. This is the way I used to trade. And the first 2 years of my trading career, I didn't think I was going to be on the floor much longer of the stock exchange, because I couldn't have anything to show for this style of trading. I couldn't make a dime. I was basically trading water and losing some. And I thought I would probably be let go. So I was lucky enough to come in contact with my mentors on the floor. They saw how much I was struggling. They saw how much work and attention to detail I was giving to this traditional way of trading, and they said, Steve, listen, we know you want to succeed, we know you're working hard, but trust us, in order to trade tops and bottoms, you have to grasp this concept, because that is the only way you will be able to trade them, and is the only way you will be able to have consistent gains. And I said, what is that? And they basically said this to me, what I'm going to be telling you. There is no such thing as overbought or oversold, okay? Now you must grasp that concept if you really, really want to get on the road to consistency. I know we've all been taught that when something is too high, we sell, and when something is too low, we buy. And that will work every once in a while. But when it doesn't work, it fails miserably and we give everything back, okay? So that's not a consistent way to trade. We don't want to have our P&L look like it's some type of roller coaster where it's going straight up and then falls straight back down. We want more of a consistency or a nice upward slope to our profit and loss statement, all right? So the only way we can do that is by really coming clear with a concept that there is no such thing as overbought, oversold. Now, it took me a long time to really, to give into this new idea that I had never heard of before. But when I realized it, I found out that there really never was anything as overbought or oversold, because I looked at stocks that went up as high as they wanted to, and they were overbought for weeks, even years. Same thing with stocks. Remember Enron? It was oversold, kept going down to zero. So there's no such thing. Stocks will go up as high as they want. Futures, currency pairs will go down as low as they want. It's really silly or foolish to think that we can pick a bottom and stand in the way. Okay? So if you really want to get in the road to consistency, in my opinion, you must grasp this concept. There is no such thing as overbought or oversold. There are a few traders who are able to make consistent gains with this approach, but the majority of us don't. So if there is no such thing as overbought or oversold, then what is the right way to trade tops and bottoms? Well, the right way is simply what my mentors taught me, to go with them. And this is the technique I'm going to be sharing with you today on how to go with tops and bottoms. All right, so here we go. This is the way we are going to be trading this. And get out your pencils and paper. And once again, this is being recorded, but if you have any questions, kindly wait till the very end of the class. Now let's go back to those instructional charts once more. And remember, they are older charts, but only so we can instruct you on what to look for. I will be showing you charts in just a few moments that are just a matter of days old, okay? Now here's what my mentors taught me. They said, before you do anything, before you pull the trigger, before you're convinced what someone said in the trading room or chat room that you have to buy or sell something, before you do that, you must plot a 50-period simple moving average, okay? And then once you plot it, you must ask yourself, where is price in relation to that 50-period moving average, all right? Because if price is above, that means we will only be buyers. That means we will only be looking for structure that tells us to go long. Whereas if price is below, as it is in this case, it means we're only sellers. It means we're only looking to go short. It doesn't mean we're going to sell at the market, but we have to look for structure that is only short or selling biased, okay? So you see how simple this is? Right away, we've already eliminated what we feel are half of our losing trades because, we're on the right side of the market. So now that we know we're going short, we're not going to even consider buying cat tractor. How do we use this slow stochastic that we have plotted on the bottom? Well, since we're going short, we want to locate all of the so-called oversold areas. They're circled in red, okay? Anything below that 20 threshold, conventional wisdom tells us, is oversold. Now, why do we want to locate them? Because we want to exploit them, because we've come to the conclusion that there is no such thing as oversold. So we're going to exploit this, okay? So if there's no such thing as oversold, well, we just simply want to identify all the short-term bottoms, as we see here with these red horizontal lines, that were created while we were in the so-called oversold area, okay? Now there are short-term bottoms that were created, such as this one, but where was it created? Well, the indicator wasn't oversold, so we're going to bypass those. We only want to identify the ones that were created where the indicator was oversold. And then what do? Well, we simply remember where these are, and once we trade one or two ticks below them, that's our entry. So you see now, whereas before we had a couple of winners and then gave everything back with a series of losers, now we just have a series of winners, okay? Remember, this is an entry technique. I know the first thing you're probably saying is, well wait a minute, where do I get out? Where do I place my stop? How many shares should I trade? What about money management? Those are all things in our courses. I'm just sharing with you a proprietary entry technique today. Now remember, you can use this on any strategy you currently have that comes with all money management. It comes with stop placement, that comes with exit points, and just apply this way to enter instead of the way you're currently entering, okay? Let's look at that chart in the E-mini. This is a 5-minute chart now, all right? What's the first thing we do? We don't care what someone says on TV. We don't care what they announce because of the jobless claims or because of earnings. We don't care about those things. We only care what the market is telling us. And how do we know what the market's telling us? We add the 50-period moving average. And if price is above, the market is telling us most likely we're going higher. You see how simple this is. We don't have to complicate and bog down our trading by trying to overanalyze it, listening to news, listening to chat rooms, going to trading rooms. It doesn't, it's silly. The only thing we have to listen to is the chart in front of us. You don't have to look at a number of charts. We just look at the one chart we're trading. So if the 5-minute chart is above the 50, what does that tell us? It means we're only going to be looking for buy setups. Now, if we're looking for buy setups using this technique, that means we're going to exploit so-called overbought territory, circled in green. Okay? Why are we doing that? Because we know there's no such thing as overbought. It doesn't exist. So if people are betting on that, we're going to exploit that. So all we have to do is identify all of the tops that were created in the so-called overbought area, and once we trade 1 or 2 ticks above, that's our entry point. Now, where before we had a couple of good trades and then we gave everything back, now we have nothing but winners. Why? Because we are in sync with the 50-period moving average and we are exploiting overbought conditions because we know there's no such thing as overbought. It doesn't exist. It's a mirage. It's a phantom. Something we've been taught, something I used for 2 years and I almost went broke using it because I thought it was supposed to work and it would only work a couple of times, then I'd give everything back later on. How about the Swiss franc? Remember currency pairs? Now this one, we do the same technique. We don't care and change anything because we're looking at a daily bar or because we're looking at a currency pair. First thing we do is we apply the 50-period moving average. All right? We ask ourselves, where is price in relation to the 50-period moving average? Obviously, price is above. So if you recall before, I was trying to short the Swiss franc using the so-called overbought, oversold technique that so many people use. Now, looking back at this, I go, boy, I had no business even going short the Swiss franc. The only thing I should have been doing is looking to go long. Now remember, it doesn't matter if you use this technique. You could use, your strategy. You could apply your strategy and say, well, Steve, I appreciate this technique you've taught us today, but I like the strategy I currently trade. That's fine. I mean, we encourage you, continue to use it if you do well with it and you feel comfortable with it. But we feel so strongly that you'll increase your odds for success if you simply add the 50-period moving average and apply the same concept. If price is above, then only take buy signals that your strategy has given you. Don't try to go short. So using this technique I've shared with you, we're going to exploit so-called overbought conditions. All right, to see how right here we have the circling of the overbought area. Now if we go all the way back to this chart to July of this chart, we were overbought July, August, in September, going into October. I mean, how long are we going to be overbought? So you see how it really is foolish to try and pick a top, just depending on something being too high too soon. It's silly, or depending on resistance, or depending on volume, depending on the institutions that they're selling. It's silly. That's too deceptive and there's too much discretion involved. Just listen to the market. If the market is above the 50, the market is telling you most likely I'm going to go higher. So just come on board. So in this case, we're going to exploit overbought. These are the short-term tops that we identify. And where before we were just selling the Swiss franc all the way up, now we're just buying. And before where we had nothing but losing trades, now we have nothing but winning trades. Okay, so this in a nutshell is the technique. It's an entry technique, not a full-fledged strategy. It's just the entry technique I'm sharing with you today, something that was taught to me by my mentors on the floor nearly 40 years ago, and it's really helped me, and we apply this to a lot of our strategies and techniques. Now let's look at a lot more charts in different markets so that you can get a better idea how to start using this. You can start using this as early as tomorrow if you'd like. Let's look at some more examples, and we will start out with stocks once again for all you stock traders. Okay, here's an example in RAI going into November. This was the last week of October. This was just last week. And we ask ourselves, where is the majority of price in relation to the 50 period? Well, obviously, price is above. Even though we had these little fits and closes above and below, above and low, the majority of price is really above the 50. So looking back all the way back to August, we knew that we were only going to be buyers of RAI, even though it was 10 points lower. So if we're going to be buyers back here, well, we just want to simply exploit all the so-called overbought conditions. And then we just identify the tops, and those are our entry points. Now, usually when we tell our members that are using this technique, you get the biggest bang for your buck by taking the first signal. So if you take, and we're just going to show you what you would have accomplished had you taken this very first signal right here, roughly 7 points in just a couple of months. That's an RAI. Let's look at Yahoo coming into October, all right? Obviously, we're only going to be selling. Why? Because price is below the 50. Do you see how going back all the way back to June, Yahoo told us only to be going short? It wasn't because we looked at the earnings. It wasn't because we looked at what was going on financially in the sector. It wasn't because we were looking at what was going on with interest rates. We don't bog our trading down with that noise. That's good for investing, but if you're trading, you really don't need it. All you need to do is apply the 50-period moving average to get an overall view of the trend. And as far back as June, Yahoo was telling us, you know what, you should be shorting me because I'm probably going to be going lower because my majority of my price is below the 50-period moving average. So if we were applying this technique, we simply locate the so-called oversold conditions. Now someone here would say, well, Steve, why didn't you use this? This was overbought. You're right. But what will we have to happen in order to take advantage of this overbought scenario? We would have had to go long, and for that to happen, price needs to be above the 50. So we're going to just bypass that. If price is below, we only look for selling opportunities. Okay. Now we just simply identify the bottoms that were created in the so-called oversold areas. Had we taken this very first setup right here, well, that would have been a nice one going back to the beginning of July, and that was 12 points to the downside in the next 3 months coming into October. A more current chart here in NOC coming into last week. All right, now here, students, it's a little bit more advanced. Students have difficulty because they say, well, Steve, we are below the 50, we're above it, we're below, we're above it. This is difficult to get a good idea of what's going on. You're right. When you see a chart like this, go down and look at the indicator, whatever indicator you decide to use, and just look at the so-called overbought and oversold areas. Remember, in order to go long exploiting an overbought condition, we have to be above the 50. And in order to go short, we have to be below the 50. Now, if we look at this scenario right here, well, they are all in line. We could go long above here and go short below here. But did we ever trade at this point here? No, we never went below this short-term bottom that was created in the oversold area. So there was no trade to go short. So the only ones we took were the ones to go long. Right here, above here, and here. And had we taken this very first one, we would have gone long roughly around 175. And remember, we know this is an expensive stock. You could purchase options. It doesn't matter. We have a number of students who use this technique at specialist trading. And rather than once they get a signal, they jump in and buy the stock, they just simply purchase a long call or a long put if they're going short. But had you taken that very first setup, well, you could have had 20 points in roughly about 3 weeks coming into November, this past week. Now, we had no idea that the stock was going to gap up on this, probably some good news about earnings or something involved with the company. We had no idea. All we had information was we were above the 50-period moving average. How about when? Well, once again, we're oscillating below, above, but the majority of price is below the 50, and as we can see here, we never had this short-term oscillator above the overbought area, so it wasn't even giving us any signals to go long because it wasn't in so-called overbought. So we're just going to exploit the so-called oversold. And we simply identify the bottoms that were created. This was in when coming into August all the way into the second week of October. Had we taken the very first setup right here, roughly around 95, well, that's 45 points to the downside in the next 3 months. Okay? Now, this doesn't just stop with stocks. Here's a weekly chart of crude oil. Now, a lot of people were saying, in the summer coming in this past year, boy, crude oil has to bottom here. It's got to see some support. It's coming down far too low. Remember, that's overanalyzation. There's no reason to even try and figure that out. The only thing you have to really do is ask yourself, where is price in relation to the 50? Now, as far back as September of 2014, crude oil was telling us, hey, listen, you should only short me because I'm below the 50-period moving average now, okay, on a weekly basis. So there was no news we needed to follow. There was nothing we need to look at what was going on in the world. The only thing we have to look at is the chart in front of you. It was already telling us, actually screaming, that you should be going short crude oil. So if we want to use the technique I share with you today, we want to exploit, since we're below the 50 this entire time, here are the short-term lows. There are the lows identified, and then we just simply would have gone short. And you've taken the very first one, that's 45 points coming into this year. Now another chart here, which I got, which is coming into this week. This was just the last week of October. This was in sugar. Now I don't trade sugar, but I'm just sharing with you this chart just to show you that it does not matter what markets you trade this in. You will see this scenario in any market, in any time frame, and in any direction. Here, once again, we have a daily chart of sugar plotted. We're above and then we're below the 50-period moving average. But remember, in order to take any of those signals, we have to be exploiting overbought and oversold. So did we ever go below the oversold threshold? No, we never went below there. So there's no trade set up. So we can only exploit overbought conditions. All right. So we simply locate where these overbought conditions are. We identify the tops, and it's off to the races. We use the same technique. Nothing changes because of the market. See, that's when you see the validity of a technique, when it is the same, when you basically apply the same principles to whatever market or time frame. You don't have to change anything. Let's look at the E-mini S&P. Let's look at a different time frame for futures. I want to start out with an older chart here. This is a 60-minute chart, but going all the way back to August. And the reason I'm saying this is, once again, how traders get in their own way. Traders love to be victims. They love to blame their losses or the reason why they couldn't make money on outside sources. And that, once again, is a product of the way we've been taught, because we're always looking at outside sources to tell us what to do. And when they don't work, we blame them. And it's a great out. It's a great excuse to have. It's a great way to take the responsibility off our shoulders, because it wasn't my fault. It was these hedge funds with these high frequency computer models that ruined the market, and I wasn't able to make any money. Perfect case in point here was last August. Here's an hourly chart of the E-mini. Right before the market fell out of bed, a lot of traders said, boy, I didn't see that coming. The market fell over 1,000 points in one day. There's no way for a little guy like me to make any money. These frequency traders and all these programs and these hedge funds, they rule the market. It's basically they've taken me out of the game. So once again, you have a great excuse to blame something on someone. If you take the information that we provide for you in specialist trading and put the power back in your own hands, you take responsibility for everything in your trading career. Therefore, there's no one to blame if it doesn't work, if you have a small loss. But at the same time, there's no one to congratulate and say, boy, thank you for telling me what to buy or what to sell. You are in charge of your own destiny. As in this case right here on this hourly chart, where was price in relation to the 50-period moving average coming into the 19th of August? Well, price was, the majority of it was below. We had one day that closed above, but the majority of price was below. All right. Were we in any overbought conditions? No. So we know we're not going to look to buy. We're only going to look to exploit oversold conditions. Okay. Now, once we know that and we're below the 50, we simply identify the bottoms that were created. And how could you have blamed anyone for your loss if you couldn't take advantage of this 230-point swing to the downside in 2 days? That's roughly about almost nearly $12,000 per contract in 2 days. You have all the information in front of you, but for some reason we've always been taught, well, someone's got to tell me what to do. Someone's got to show me where to be. We want you to be in charge of your own trading destiny and make your own decisions. That's our philosophy, that the only way you will become consistent is by taking charge of your own trading. How about this daily chart? Okay, well, this is October. This is the entire month of October coming into November, just last week. We see here that in September, we were below the 50-period moving average on a daily basis, but the very first week of October, we started to have consistent closes above. So if we're closing above at the beginning of October, well, we want to take advantage of so-called overbought. As you see here, the entire month we were in overbought conditions. Even when it looked like we were rolling over, we were still overbought. This is a perfect example, as there is no such thing as overbought or oversold. The market sure can start to go down. Maybe it'll go back up again. We don't know. All we're going to look at is where price is in relation to the 50 to give us the overall feel. So if we're in October, if we're looking at daily bars, we just simply do the same process, look for tops that were created. And if you had entered, I believe, on the 15th, which is about 2 or 3 weeks ago, that's 70 points to the upside in 2 or 3 weeks. That's $3,500 per contract. That's how simple trading is. Trading is extremely simple. It's only us as traders who overcomplicate it by relying on outside sources that really have no consistency in them. And these sources can be indicators, they can be trading gurus, they can be chat rooms, anything that tells you what or how to trade. Remember, our goal is to teach you and then leave you alone, have you make your own decisions. Now, this was the daily chart for the entire month of October. Let's see something that happened last week. In fact, a week ago today. This is the last hour of the E-mini on a 1-minute chart, because I'm trying to cover all time frames here to show you how this technique can virtually work in all time frames. Here's a 1-minute chart of the E-mini last Wednesday. Coming into the last hour of the day, we were below the 50-period moving average, and right here, roughly 11:50, right before the noon hour, we started to have consistent closes above the 50. So this is telling us, well, we're only going to be looking to be buyers. Now, we don't have to use this technique. You could use your strategy. You could use something else you want to trade. But this, you see how simple this method will get you on the right side. But let's just say you wanted to use this entry technique. Well, if you're going long, and you want to simply identify overbought conditions. Now, as you see right here, this was a bottom made in an overall sell condition because we were oversold. But we never traded there. So there was no course taken. There was no action taken. So we want to simply look at the overbought scenarios. We identify the tops. And had we taken this very first signal and said, I'm only going to take one trade one contract, well, that would have generated nearly 19 points in the last hour of the day. Over $900 per contract. Imagine if you had traded 10 contracts. This just happened just this past 4 or 5 days ago. Excuse me. And lastly, let's look at the Forex markets once again. Let's look at a recent chart in the Canadian dollar. Coming into October, obviously we're only going to be buyers. Why? Because on a daily basis, the Canadian dollar has been above the 50 period. There's no reason we have to look at anything else. So if price is above the 50, we want to exploit overbought conditions right here. Then once we find out where those so-called overbought conditions are, where we know there's no such validity in them, we just simply identify the tops that were created, and then we want to exploit them. Once we trade 1 or 2 pips above, look at all the buy setups we had. Had we only taken the very first one, remember that's the one that usually gives you the most bang for your buck, well, that's 700 pips, or roughly $7,000 in the next 3 or 4 months, okay, per contract in the Canadian dollar. Now we know that some people who trade the currency pairs are more investing. They like to trade weekly and even monthly charts. Let's look at a weekly chart of the Australian dollar. Now, as far back as October a year ago of 2014, the market was telling us on a weekly basis to sell. Just right here. We had 3 consecutive closes below the 50 period. These are all weekly bars. So at this point, sure, someone says, well, sure, Steve, it's easy to see to go sell at looking at this. Well, had you not seen this entire chart, right here you would have known it's time to sell. Okay? Way before the trend started. So for sellers, we're exploiting oversold conditions. We simply identify the bottoms that were created. And had we taken that very first signal, that would have been 1,700 pips in 1 year per contract, and that's roughly $17,000. So I've shown you this technique on stocks. I've shown you how it works on the E-mini futures, and I've shown you on currency pairs. I've shown the daily bars. I've shown the weekly bars and 1-minute bars. I've even shown you commodity charts and crude oil, things of that nature, and sugar. So there's nothing that needs to be changed. You can start using this as soon as possible. The main thing I want to leave you with are these two important points to remember. And that is, please, if you want to change your trading route, if you're really struggling, please grasp this concept. It took me a while to grasp it, so I'm not going to expect you to do it overnight, but really, trust me, it changed everything for me when I was struggling once I finally gave in. And that is, you must realize there is no such thing as overbought, oversold. I just shown you charts where markets were oversold for months, if not years. And the same thing on the oversold. I showed you the Australian dollar right now on a weekly basis that was oversold this past entire year. Anyone trying to pick a top or bottom in those conditions is just giving money away. And we don't want you to do that. We want you to be consistent traders and take charge of your own trading. So the first thing you have to realize and come to terms with is that there is no such thing as overbought, oversold. And once you finally grasp this concept, well, then you will never ever try to pick tops and bottoms the conventional way, because you know that's really a loser's mentality. It's really a recipe for disaster. So as we close here, I want you to ask yourself, before you can ask me any questions, I want you to ask yourself, and ask yourself honestly, what I showed you here today, do you think any of these edges could have helped your trading this past year? Okay? Do you think had you had seen this presentation in January of 2015, could it have helped your trading so that you'd be a little bit more consistent? I can almost promise you that had you just used the simple technique of the 50-period moving average, as in this case, you would have greatly increased your odds for success. As we see here in this chart of TE, this is the way most traders will trade. They'll look at something like this and say, well, Steve, there's no trend here. In fact, we're in a rangy market. This is where I've been taught where you always get whipsawed, and my teachers and webinars I go to always say to stay away from these markets because the market really has no clear-cut trend. Excuse me. There's no clear-cut trend, so I shouldn't be doing anything if the market has no idea what it's doing. Well, that's the way I used to trade. But now that you know the simple rule of the 50-period moving average, you ask yourself, where is price in relation to that? Well, price has always been above the 50. So there actually is a clear-cut overall trend. Not a short term, but an overall trend. And the overall trend has been up. So if you want to invest in TE, don't look at it from shorting or from being on the sidelines or waiting for something, because if you had waited, you would have missed this big move to the upside. Okay? So always take the 50-period moving average into consideration. In fact, here is something a student talked to me about. He said, Steve, this always happens to me. I would look at a stock like this, El Pollo Loco, and it had been going lower, but I was in some chat room and they said, you know what, the institutions are really coming in here to buy. This is some Fibonacci support level, or some program I have says you have to buy here. It's going to be turning around, and this is where I get in, and look what happened. Okay? This always happens to me. And I said, well, where was price in relation to the 50-period moving average? And they go, I don't know why. I said, well, if you simply plotted that, you would have seen that this entire time price was below the 50, going back weeks, if not months. And that tells you that you have no reason being long El Pollo Loco. The only thing you should have been looking for are areas in which to go short with one of my strategies or one of yours. So I really think that simple technique of using the 50-period moving average to tell you the overall trend could have really helped your trading this past year. Now, what if I could give you 3 or 4, maybe even 5 more techniques such as this, but that are entirely different, that can add to your increased probability for success in trading. I just want to take a moment to talk about what we're offering all of you today, and this is my Secrets of a Stock Exchange Specialist training sessions. 3 years ago, I was asked to speak at a conference in Denver. I was the featured speaker there, and I spoke in front of hundreds of people who paid good money to come see me speak. I spoke for 3 hours where I gave many more edges, such as the one I share with you today. I talked about which indicators to use, which ones not to use. I went into the difference between a system versus a strategy. I shared with all the people in attendance what the #1 chart pattern is, what they should be looking for in any technique. And what happens, what they videoed, the people who put the conference on videoed this. And so we have this all on a high definition video for you in a 3-hour seminar. But the best thing about this seminar I had that was videotaped is that I also gave the complete rules to one of our best pullback strategies. That's strategy #1. And by best, I mean most consistent. Now, what I've showed you today is just an entry technique, just one important piece of the puzzle. But on this 3-hour seminar, I give you all the rules. I not only give you the entry, I give you stop placement, I give you exit points, I give you money management and how to trade it conservatively and aggressively. In fact, let me show you some of the recent signals that strategy number 1 generated. Here's a chart coming into October where BBY, for all intents and purposes, was in a downtrend. But our strategy number 1, deemed that we were actually in an uptrend, and that was just a pullback. So on the 29th, it generated a buy signal, and anyone in our course who had the strategy number 1 course would have seen that this was a buy setup, and look what happened. The stock reached the bottom on that exact day. Now this can also go to the downside. We all know that the news has been very terrible lately in Volkswagen. A number of different reports coming out about the CEO resigning and about how they falsified reports with the emission tests and everything. All right, well, it's funny because while the stock was going down before all that information came out, strategy number 1 was generating sell signals. One in August and then another one on the 9th that worked out fantastic before the real brunt of all that negative news came out. Okay, so this will work in advance of news many times. Now, it not only stops there, the same exact rules will work on currency pairs. Here's a daily chart of the euro dollar in August. As we see, a lot of students were saying, well, Steve, how can I buy this? It looks like it's rolling over. It looks like, the euro dollar has topped out and we're going straight down. Well, the strategy just, deemed that we were in an uptrend, and this was simply a pullback and generated a buy signal, and look what happened to the euro dollar. And then just a couple of weeks ago, on a 5-minute chart of the E-mini, as we see here, we obviously are in a downtrend on this 5-minute chart, but every time we had a little bounce to the upside, well, that's a pullback to the upside. And if you're an intraday trader, look at all these sell signals that were generated. You could have used this intraday trading the futures. So this is a great strategy, and you get all of the rules to this, plus about 5 more high probability techniques such as the one that I just shared with you today. These techniques plus the strategy work in any market, in any time frame, any direction, and included with all this, you get lifetime correspondent with me because now you are a student of mine. So you can contact me anytime you'd like. Now, as I stated earlier, my sister site is Pro Trader Strategies. They market and promote all of my courses, all of my different techniques. On their website, they have this 3-hour video of the secrets of a stock exchange specialist. They have it offered at close to $1,000. But we're offering today to all the attendees today for $37 only. Extremely discounted price. This is only for a limited time. Now I know probably most of you who traded today probably spent more than $37 just on commission costs today. So I don't think you can get this much information, jam-packed information, along with my mentorship for only $37. Remember, it's lifetime. This is not something is going to be sent to you in the mail that you have to wait for. It's not a disc. It's an online course. So you simply email the link, and you can be up and running and watching this in just a few moments from now for only $37. But trust me, this is not something that's going to be around next week. It'll go back to the $9.97 price. So if you're on the fence for $37, well, you're going to miss your chance if you wait for more than a couple of days. Here's how to get and take advantage of that really discounted offer here. Remember, Pro Trader Strategies handles all of my courses and techniques. That's their email address. You can call them directly at area code 310-598-6677. That's the link to go to, but it's not a live link. At the very bottom, you'd have to copy and paste that. But if you look in your GoToWebinar page on the very far right, that one column there, that box underneath the chat column, they have posted a live link. So all you have to do is simply click that on. It will take you to the sign-up page. You simply put down all the information for the $37 deal, and you will be sent automatically the link to that information. And remember, this is not something that the link will expire or self-destruct in a couple of weeks. It's yours for life. So you have all this information for as long as you want, and plus I will be your mentor for as long as you want. Okay? So I'm going to leave this all up here. I thank you for holding off on any questions, and I will finally open up the question and answer box. Oh, and I see there's lots of questions. Let me try to backtrack so I don't miss anyone. Maureen asks, why would you not buy or go long at a pullback closer to the 50-period simple moving average? Well, Maureen, we would, and I'll tell you that this is actually part of what makes up strategy number 1. So for $37, you're going to get a great pullback strategy using that. But if you notice, the technique I shared with you today is not a pullback technique. It's more of a continuation entry technique. In order to have a pullback, you need to have more structure. You need to have more rules telling you how far price back should go, money management, where you enter, and that's all in the $37 deal. So I would, if you're interested in trading pullbacks close to the 50 period moving average, I would strongly suggest taking advantage of that $37 deal, okay? Let's see. That was a beautiful hidden divergence signal on Yahoo. Well, it's funny. I don't know if you're talking about what we saw. We don't look at divergence in terms of how it usually works because that's too subjective. If you're talking about what we looked at, remember, we try to have things that are really cut and dry, such as the 50 period moving average. In other words, if people look at divergence, if people look at Fibonacci, if people look at support and resistance, there's too many variables. One person could look at support and resistance and come up with an entirely different scenario than someone else who looks at the exact same chart. And we feel, it's our philosophy, that trading shouldn't be this way. It shouldn't be that subjective. It needs to be cut and dry, where two people looking at the exact same chart come up with the exact same conclusion, such as, where is price in relation to the 50? But through my 38 years, I have looked at a number of charts with people using divergence as one of them, and everyone comes up with a different scenario. So we don't focus on things that are too subjective, okay? Anthony asks, do you give the parameters for the stochastic? Is it fast or slow? Yes, Anthony, all I stated was I used a slow stochastic, but please, I don't want you to think that the only way this technique will work is using a slow stochastic. We have members who say, hey, Steve, I tried this on Wilder's, or I tried it on Williams' stochastic, and it works better. Fine, go ahead. Once you know the technique, feel free. All we're doing is we were exploiting overbought and oversold conditions. Why? Because we now have come to the realization that there's no such thing as overbought, oversold. So we're going to exploit them. All right? So it doesn't matter what is telling us is overbought or oversold. We just want to take advantage of it. We now know that it doesn't exist. It never did exist. So we want to, just exploit it. So it doesn't matter what tool you're using. It could be just something coming from a chat room or a trade room, someone telling you this market is oversold. That's okay. It just, as long as you know where the area is and you exploit it. Okay. Let's see, Bo says that's buying break of prior swing high fractal in an uptrend, price trading above 50 and selling. I'm not sure what you're saying. It looks more like you're saying a statement there, but remember, in terms of describing things, Bo, don't overcomplicate your trading. In other words, I know I've looked at fractals before and stuff. But don't overcomplicate things, by names or titles. It's a short-term top or short-term bottom. It's a lower top. I know we try to make things sound more sophisticated than what they are, but many times they only get in the way. All we're doing is saying, listen, here was a top created while we were in so-called overbought. Okay, we're just going to buy above it. That's it. We don't have to call it different names or stuff. I trust me. I read books on chaos and fractals, and then I realized that they're just tops and bottoms or just different patterns. Okay, but I'm not sure what you're saying. You're saying selling break of a prior swing low fractal in a downtrend, price trades below the 50-period simple moving average. Yes. In other words, remember the rules. First thing you do is ask yourself, one, where is price in relation to the 50? If price is below, then you go to step 2. You want to identify all of the so-called oversold conditions. Once you do that, then you identify bottoms that were created in those so-called oversold. And you're just going to sell 1 or 2 ticks below. Now, I know this is not a full-fledged strategy. I know you're going to say, well, where do I get out? Where do I protect myself? That's in the $37 course. I don't think you can get that information any cheaper than that, okay? Angelo asks, what inputs are you using for the slow stochastic indicator? Angelo, I'm not being sarcastic or condescending. I have no idea. All I did was this is how simple things are. I don't overcomplicate my trading for trying to put in inputs. I just saw under the indicators, I saw slow stochastic and I clicked it on. That's all I did. So I don't know what the parameters are. All I know is that the upper parameter is 80, the lower parameter is 20. And that's all I need to know. We don't need to overcomplicate our trading. There's no reason why. I was talking to one of our sales guys the other day, and I heard him talking to a student, and he said, listen, your car runs. You don't need to know exactly how it runs. You don't need to know the whole chemistry and everything behind gas and the powered engine. You just know that this is how it works. And it's the same way with this. We don't need to understand what makes up the parameters of the slower or fast stochastic. Remember, experiment. Just experiment with anything you feel comfortable with that tells you something is overbought, oversold, because we're going to exploit that. Does not matter what indicator you use. Cookie asks, would you suggest using these bars versus candles? Cookie, it absolutely makes no difference because the candle or the open high-low close bar does not determine anything. All we're looking at is a short-term top and a short-term bottom. You would have created that exact short-term top using a candle. You would have created that exact short-term bottom using a candle or an open high-low close bar. So it does not matter. They do not determine anything within this particular entry technique. Okay, so it's up to you. Bill says, at some point the direction turns the other way. When do we get off or sell or buy? Once again, Bill, this was just an entry technique. You're asking me for exits. You're asking me for stop placement. That's in the $37 deal. So trust me, I don't think you can go out to dinner tonight with your significant other or a friend for less than $50. For $37, you're going to get all this thrown in, which usually runs and is going to go back to $1,000 in a couple of days. So I would just take advantage of that, and you'll know exactly where to exit, exactly where to place your stop, and things of that nature, okay? Paul says, this is amazing. It explains a lot. I've been trying to pick tops and bottoms when the stochastic is above 80 and price is above 50 period. Is this an entry triggered at a pivot high? Well, once again, Paul, I don't want you to think that you're in the minority. Trust me, this is the way I traded. When I was a specialist. I was on the floor. I was trading during the crash. And when something came into oversold, I bought. And it would work every once in a while. But when it didn't work, there I was buying more. And then I would buy more. And then all of a sudden, the first two trades I had, I gave everything back. So there's no consistency in this way of trading. We're trying to instill consistency in all of our students. We're not promising home runs. We're not promising that you'll be able to make, $2,000 to $5,000 a month. We don't believe in that. All we're trying to do is get you on the road to being consistent so that you can define what trading is for yourself. You do not have to stay with us for years and years in order to learn how to trade. Most of our traders take our courses, take my mentorship, and then they're on their own in a matter of months. We never hear from them again because they're being consistent, successful traders. That's what we want. That's what we encourage. We don't want you to rely on someone or something telling you what to do. You should be doing that for yourself. So we try to, give you all the information you need, things that have stood the test of time, sound fundamental education, and then mold it to meet your needs, okay? Maureen says, so the bottom line is to watch the 50. Exactly. That's the bottom line. That is probably the most important thing. If you take one thing today, trust me, I'm not going to force anyone to become a student of mine. I would love to have you all become students of mine. But if someone says, this is not my cup of tea, Steve, I don't trade this way. I have my own strategy, which is doing quite well. That's great. I'm happy for you. And I want you to continue to use what you feel comfortable with. But I really feel strongly that if you just applied the 50, you would even increase your odds for success even more with your own particular trading plan. So you do not have to necessarily, say that I'm going to be using this entry technique tomorrow. But trust me, I know that there are a lot of traders out there that were just as frustrated as the way I was because nothing made sense. Every technique I had been told that was supposed to work, all traditional or wisdom, nothing worked for me. So if you're in that category, we have the strategies, we have the tips and techniques that hopefully will able to turn your trading around the same way they turn my trading around, okay? Which has been able, these things have sustained me for 38 years. So I think if they can work for me, they can work for you. And that's all we're trying to do, all right? If you have something you feel comfortable with, that's great. We're not going to try and convince you of anything, okay? Mike asks, is the SMA better than the exponential moving average? Mike, that's a great question. In my opinion, yes, it is. There's nothing wrong with the exponential. I know a lot of our students even would rather use that. It's just in my 38 years, the 50 simple moving average seems to work the best in all markets and all time frames. And so that's why I continue to use it to this day. The main thing, regardless of what type of moving average you want to use, It's just the concept that's more important than the actual moving average. Okay, the concept is if price is above, you should only be applying buy setups. If price is below, only apply sell setups. Okay, it's not so much whether it's exponential or simple, even though I prefer simple. It's more the concept that I really want you to understand. Okay. Mike asks, will this work on all charts, tick charts, rate? Yes, I mean, I showed you, 1-minute charts. I showed you, I didn't show any range or tick, but yes, it does. I apply this. I traded tick charts today and it worked perfectly. So it works on everything. It really does. So I can't stress it enough. But you have the information. You can go research it for yourself. But trust me, if you want to get that strategy, which is a great strategy, I've shown you how it works on 5-minute charts, in weekly bars, in currency pairs, in stocks, futures. That's a great strategy, strategy number 1. I can't believe you're getting all the information, roughly about 2 hours of more trading techniques, plus a full strategy for only $37. It's just our way of introducing ourselves and trying to show you that we're coming in good faith, that we really want to teach you. We're not just trying to talk and then say, well, the only way you can become a good trader is to spend thousands of dollars. We don't believe in that. We want to really make sure that you're a consistent trader so that you can be trading 20, 30, 40 years down the road. Okay? Just time for a few more questions. Timothy asks, when the stochastic is above 80 and price is above the 50, is the entry triggered at a pivot high? Yes, it has to be trading 1 or 2 ticks above that pivot high. Okay, this is where you are part of the process. Some of our students say, well, Steve, I like to get in the minute it trades 1 tick above that pivot high. Remember, it has to trade above it. Some students say, well, no, I'd like it to trade maybe 3 or 4 ticks or maybe 10 ticks, a half a point. It's up to you. It's all what makes you feel comfortable. The same way if you're shorting. It doesn't mean anything if it just goes down to the exact same price as the pivot low. It has to trade below it. Okay, that's our confirmation that we've broken that. Time for just a few more. Let's see. Henry asks, is there a strategy to download? No, you don't have to download anything. What you can do is I simply teach it to you. It's very simple. I teach it to you and show you exactly how to implement it, the same way I taught you today. Okay? It only uses one proprietary tool, and that's about it. Everything else is we're looking for a specific pattern in price. Russ says, what about for times when it's constantly going below and above the 50? Would you throw you out of trades? Would that throw you out of trades? Well, remember, I showed you charts where it did go above and below. When it does that, you have 2 choices. You can either say, you know what, I'm going to trade a market that is, easier to spot. Because remember, you don't have to trade something if you don't want to. That's where we're different from other educators. If you don't feel comfortable, don't trade it. We don't teach systems where everyone has to trade it the same way every time. We give you the option to say, listen, I don't feel comfortable. I'm going to sit this one out. Or I'm going to look for an environment that fits exactly what makes me feel comfortable. All of the prices are above or all the prices are below. Okay? But let's just say you are watching a market that is oscillating above or below. Well, then the next thing you do is look at the overbought, oversold tool, because that will tell you. Because if it's oscillating above and below and you're thinking, boy, what side should I be on? Well, if the overbought, oversold indicator is not even showing overbought, oversold, well, don't worry, you're not missing anything. You're not going to get whipsaw. You're not going to be getting out because there's no such thing as overbought, oversold. And that's what will happen many times in those scenarios where it's going back and forth. Mike is asking, what about Renko or a constant range? You know what? I haven't applied this with Renko, but you have the all the rules to this entry technique. Go ahead and experiment. It's up to you. Mike is asking about costs of tools. Mike, that would be a question for Pro Trader Strategies. Remember, I only focus on education. Anything with prices or courses or of that information, it's best to email Pro Trader Strategies and tell them that you were in this presentation, and they'll probably be able to take good care of you, okay? Russ is asking, can you show it on a chart right now of gold? Russ, this is a static presentation. It's on a PowerPoint. I don't have access to live charts. But once again, remember, our whole philosophy is giving you information so that you can be in charge. You have this information now. All you have to do is go look for yourself. Go apply a 50-period moving average on gold take a overbought, oversold tool, whatever you like, and you know how to exploit it. You should know how to do it by now. There's no reason to have someone else do it for you. I know we've all been taught, myself included, tell me what to do, tell me what to buy, tell me what to sell, and you see it coming out right now. That's why the majority of traders fail, is because we've been told we have to have someone else has to tell us. But once you get sound information and things that have stood the test of time from a reputable mentor that has been trading nearly half a century, you feel comfortable and you say, he's going to teach me so I can do it on my own. I don't have to rely on anyone. So this is a good step. Take what I've given you today, see how it works for you. And I really feel, confidently, especially with a $37 package, you'll see the attention we give to detail so that you can really increase your odds for success by making your own decisions. Okay? Last question, Andy asks, will you send me an email for the purchase of this package? Andy, best thing, Andy, would be to simply contact Pro Trader Strategies and they'll send you the email. Okay, you can email them or call them and they'll send you or set you up right on the phone or through an email. Okay. Okay, listen, I think we're just about out of time. I want to thank you all for attending today. Remember, this was an educational presentation. I gave you one piece of the puzzle, but if you want all the pieces and you really want to take your trading to the next level, I strongly urge you to take advantage of that $37 deal. Remember, most of you probably spent more than that just on commission costs today, so you can't get a better deal for tons of information that people spend hundreds of dollars to come see me speak. You're getting for less than the price of dinner for two. So really take advantage of that before it goes all the way back to $1,000 and you'll miss the cost of that entirely, okay? In conclusion, I want to thank you all for attending. Thanks for taking time out of your day today. Here's the information you need. Remember, contact Pro Trader Strategies. Call them at 310-598-6677 or simply go to the link right there on the bottom. If you want to go there right now, it's right on your chat box on the far right. You simply have to click that on and it will automatically take you there, okay? Thank you so much for attending today. I wish you the best of luck in trading and I look forward to all of you becoming students and members of mine at Specialist Trading. Thank you so much and I hope to see you next time. Bye-bye.